I would like to start with some introductions. Would you please introduce yourself, I guess, in this order?
Good morning, everyone. My name's Jon Light. I'm I'm head of products OTC at Devexperts. We've been around for 20 years, building trading platforms for brokers and exchanges. Our platforms cover FX, CFDs, equities, crypto, futures, options, and the range of platforms goes from out-of-the-box SaaS offerings where brokers can get set up extremely quickly, through to enterprise where the platform can be completely customized. We have over 800 engineers, and we can make anything for any broker, through to full source code licenses where brokers can take it in-house.
Thank you, Jon. Wassim?
Hello, everyone. I'm Wassim Khateeb. I am CCO at FXCUBIC. We are a fintech company specialized in the development of low latency software, risk management solutions, and reporting in general. And I'm very happy to be with you today.
Thank you, Wassim. Our lovely lady, Albina?
Good morning, everyone. My name is Albina Zhdanova, operational officer for Tools for Brokers. We are helping brokerage companies for a bit over than 10 years with connecting to liquidity, solving the backend issues, expanding their offers to the traders, so helping with all the backend solutions that they install on the platforms.
Our broker expert, Damian.
Good morning, folks. My name is Damian Bunce. I'm running our trading business at Exness. Exness is not a well-known brand in this part of the world, but in some parts of the world, we're a very big retail market maker. We're here primarily because we're launching our B2B business. So looking forward to speaking to some of you later on.
Thank you, Damian. Matt?
Good morning, everyone. Lovely to see you all today. Thanks for joining us at the first session. So I'm the CEO and co-founder of Adaptive. We're a technology provider that specializes in trade execution, liquidity discovery, and liquidity distribution systems. We have 4 people who value differentiation via technology. We build on top of a proprietary platform to accelerate the delivery of bespoke solutions, which means our clients get to create something of value to let them stand out in what is a very crowded marketplace.
Thank you very much. So our first question, or the first topic I wanted to discuss, is about the biggest pain points of the brokers, especially in the current volatile market. And I'd like, Damian, to ask you to answer the question first, as you are our representative of really the brokerage.
Okay, thank you, Elina. I mean, early morning discussing pain points is already a great energizer for everyone. And I think anybody that's in the audience here as part of brokerage understands that our industry is literally riddled with pain points. And I guess those pain points differ depending on the kind of business model that you offer. So when I think about pain points and us as a market maker, it does actually revolve heavily around the volatility, in the sense that when we have a non-farm payrolls or a CPI news release, of course, we have extreme volumes, and we'll see in our business, for example, 2,500 ticks per second. And during that period of time, hundreds of thousands of clients want to put on a trade because that's when they have, basically that's where they believe they have profitability. And so a key pain point is, how do you scale technology to deal with these massive peaks in throughput? I think outside of trading, when you think about just general pain points, everybody knows that the payment systems, the rules around withdrawals and deposits are complex in the various jurisdictions. So payments remains a pain point in the industry. I use the word regulation. It's kind of a boring word. Everyone, I can't think of anything more imaginative, but it would be inaccurate to state that regulation is not complex. It is. It differs, by geography. So if you're in France, you can't advertise CFDs, but you can advertise stocks. You need to build all these different rule sets, into your into your offering. So regulation brings about a huge amount of complexity. And I think one other thing that comes to mind when I think about pain points, and for those of you that run or are involved in retail, it is about scaling and building these massive call centers, because nobody in any organization wants to deal with a client problem for a client that's trading $10. And it's a reality, it's not a scalable model. So how do you build scalable customer services solutions that are customer friendly, put you in a good place as a good client focused company, but you're not spending millions on staff, etc. So they're the pain points in my mind.
Well, I do agree. I think especially the first one, and I would, in easier words, I would say it's stability of profitability. So making sure that you direct your flows correctly and get the best out of it. So Wassim, how do you help brokers get that stability of profits?
Yes, sure. So I believe it's all about dealing about the recent volatility, which is in general for a broker is a good problem to have. So lots of volatility can translate in important profits, and we noticed in actually October, September, some records broken in the volatility ever. So essential things to have at this point is strong technology tools, especially related to auto recovery systems. What I mean by that is being able to automate a lot of the parts related to the pricing. For example, a broker would be connected to several liquidity providers. And if for any reason one of the liquidity providers is not pricing the right price or is stop pricing, then it's good to have a tool that will remove that feed from the pool of liquidity that can be from the aggregation engine actually. Or having a technology that could detect toxic trades automatically and apply certain either delays on the trade or certain risk management algorithms that will make a difference. I also believe one of the challenges of the brokers nowadays is because technology is developing a lot and more tools are in the markets, it's being able to centralize all the tools in one user interface, being able to see your reports, your pricing engine, aggregation engine, your risk management in general, everything in one single interface. And ideally, for the brokers to focus on the hosting part in the sense of being able to host their own systems so that they can react very quickly for any problem that occurs in the market that can be related to pricing, to execution in general. So I definitely believe these are some of the main challenges to deal with the current good problem that we're having, which is volatility.
So would you say that brokers would actually bring those departments in-house now and have the knowledge to host their own solution and run the team to run the infrastructures?
I think it's a choice that is not only from a technology perspective, it's also commercial in the sense of building all this infrastructure in-house is not a small investment. So I believe it is better for them to outsource that, but with one single provider able to provide tools for everything related from pricing, liquidity, aggregation, risk management, and reporting. This is what would be our recommendation.
Okay, thank you. Jon, I wanted to ask you about, well, the recent events in the industry. And I feel that a lot of brokers are becoming more multi-platform than mono-platform. Would you see that as a pain point as well, or is this just a trend?
Yeah, I'd say it is a pain point, but all brokers are obviously different, so it's quite hard to generalize for all of them. I would say the biggest pain point, like bubbling down to it, is brokers being able to be flexible without incurring really large costs. So we speak to a lot of startup brokers, and obviously for them, the most important thing is to get up and running really quickly. They don't want to spend time signing with lots of different vendors, integrating lots of different platforms. Every day they're not operational, they're losing money. So lots of those guys go sign up with white label providers or providers that give you everything out of the box. But later down the line, it's hard for them because they have some kind of vendor lock-in. It's hard for them to move away from different platforms and things like this. And this goes all the way through to established brokers. So established brokers have exactly the same problem. I mean, they don't know what their business model is going to be in 5 years' time. They don't know if their platform is going to be able to support that. We speak to a lot of established retail brokers that want to move into the institutional space, have a B2B offering, and it's very difficult for them to do that on a retail platform. It works in completely different ways. So the only option is either they can customize their existing platform, which they might not be able to, or they go and buy a second platform to sit alongside, which obviously incurs lots of costs and means they need to maybe manage risk in 2 different places. They're not going to get efficiencies of netting and things like that. So I really say the flexibility without incurring costs and the recent issues that you allude to with regards to MQ is just one of those. Mobile is one of the most important ways to attract new traders. You want to attract the new generation. You want to go into new markets. Africa, South America, you have to have a good mobile platform that is native, uses everything that the mobile phones can deliver. And this is just one option. So really having a platform that can work to your business models and be flexible in the future rather than the platform dictating what business models you have to end up working on.
Okay. Matt, I know you offer a full stack solution, so not just the front end platform, but also a matching engine. So what's your take on that situation in the market? Are brokers becoming multi-platform, or do they bring things in-house and try to control the offering?
I think rather wisely, different brokers are taking different approaches. To come back to a comment Damian made, it's probably easier to talk about what doesn't hurt in a broker's organization than the different pain points. Technology is one of those points. I think we're seeing an increased push towards institutional grade execution technology. The huge increase in retail volumes over the last 3 years doesn't seem to be slowing down. We see institutional systems capable of doing millions of messages a second at very low latencies. And in the retail space, we just don't see the same level of execution quality. I think one of the pain points for brokers is that they are caught between a market demanding ever greater quality of execution on the retail side and a set of retail technology that has perhaps been built to support not that vision. And there's a squeeze there. And so brokers are looking to move towards a more standardized approach, a more institutional approach to technology. One of the other things that you touched on, Elina, is around predictability of profit. I think there's no point in talking about predictability of profit unless you talk about the timescales that's over. Do we mean minute to minute? Do we mean day to day, quarter to quarter, or year to year? To talk about predictability of profit at year-to-year scale is very different from minute to minute. At the minute-to-minute scale, you're talking about real-time risk management, quality of execution, quality of flow. At year-to-year scale, you're talking about control of your own destiny, the ability to invest in strategic direction that you believe is where you will differentiate in the future. Our USP, if you will, is really serving clients that want to differentiate themselves via technology, who are looking to ensure profitability over year-to-year time horizons. It's not quick or easy, to John's point, to deploy a full stack trading solution. There's huge amounts of upstream and downstream integrations that need to be done. But one of the things that it does get you is control of your own destiny. And if you're right about where your destiny points, then you've got a pretty good grasp of profitability and the ability to control that over a year-to-year time horizon.
Okay, yeah. So that does make sense. So I guess for the brokers with this, let's say, a larger brokers. And I wanted to ask Albina, because I know that you are what we call platform agnostic. So as I understand, you can integrate pretty much any platform into your system. So is it more expensive for brokers to run their own platforms or more platforms? Or what do you see in the market at that?
Thank you. This is actually a question combined with the first one about the pain points, because I agree that there is a massive list of pain points for the brokerage companies. And when we're talking about the platforms and technology providers, competition on all the levels is very high, whether we're talking about the bridging, the platform, CRM, payment systems, everything. We have many companies, and the stability and reliability and the knowledge of such companies are given, they are expected. But when we're talking about adding more platforms at the moment, the biggest issue is that they need to combine all these pieces together. Are traders aware how to use this platform? Will they use this platform? How they can sign up? Is it easy to attach it to my CRM? Are my liquidity providers connected there? The bridge providers? So it is multiple, like it's a big puzzle to collect for them. So they, of course, need to have partners in that extent, which can be a pain point in the question with the multi-platform, and in general, those partners with whom they can rely on the flexibility, as John mentioned, and the scalability in terms of that you see a little bit upfront what's going to happen. You making assumptions. You can be wrong, of course, about what's going to happen, but you're making some steps forward, because when things happens and the brokerage company is coming to us, they expect us to answer all the questions already. And we also learned the news just today in the morning. But we expected to have questions, so that's why we analyze things. And from that perspective, I see that maybe not the next month, maybe not in the next 3 months, especially Christmas is so no one going to do any big changes when half of people will be on vacation for half of the month. But I think gradually it will come to a point that we will see more and more trading platforms, and maybe the market would be even more dictated by the traders' behavior, because the new generation, new audience that would like to trade, they would maybe prefer different interfaces and options and available functions that they can use, and that will drive the brokerage companies to have just more options on their plate.
I see.
Elina,
thank you.
can I respond?
Sure. Yes, please.
Look, I think it's kind of difficult to hear from over there, so I don't know whether or not this is audible. You know, it really depends on the kind of brokerage business that you're offering, because, and again, not to brag, but at Exness, you know, we execute $2.8 trillion per month. We execute about 1.7 billion orders per year. It's an absolutely enormous animal, and there's no way that you can take that kind of level of processing and pass that to a third party. I mean, we use MetaQuotes, it's very well known, but we use only a very small subset of MetaQuotes. All of our core execution, our core pricing, all of that is proprietary. And we simply couldn't process the kind of business that we process without building this stuff in-house. So I think there's a bit of a trade-off. Maybe in smaller brokers, you know, you can provide, you know, you can get the job done with a good, solid, you know, third party. But certainly when it comes to really hardcore, you know, vast processing of trades, you have to take this in-house and build it yourself with your own experts.
There's economies of scale at question there, Damian, which is something that Exness has and can afford to invest in that technology. But the other part of that is that Exness knows how it wants to differentiate in the market, and it knows that it wants to provide that quality of execution.
Also, your balance sheet is one of the strongest in the market. Like, I don't think that there are lots of brokers who can say that, you know.
Well, look, again, it's down to business model. I mean, if you are a market maker, you know, you are there providing a bid and offer consistently to your clients on all different types of instruments, whether it's gold or Bitcoin. And to do that, you need to have a strong balance sheet, because, you know, if people are loading up and you end up with a very large exposure, you better be sure that, you know, if clients decide they all want to withdraw their money at the same time, you know, you have the money. Obviously, Exness does have that. We have a strong balance sheet because, you know, we built it over the years. But at the same time, you know, a market maker runs risk. And so there's situations where, of course, you know, if you're a standard DMA model, you don't run that level of risk at the broker. So it's kind of swings and roundabouts. There's pros and cons.
Yeah, but I think also, you know, especially in the current market environment, building a technology is such an expensive enterprise, especially if you want to do it right. If just investing in those departments, that's where I'm with Matt. I think there's not a lot of companies out there who have the resources and sometimes even the knowledge to build a matching engine, for example. And Wassim, I mean, you see a lot, I guess, of that as well.
Yes, investing in building it is one thing, and maintaining it is another that will require also a lot of resources. So I agree on Damian's point. Now, that maybe is an exception for broker of a certain size, which are representing a small part. If you look at the total brokerage, at the total broker numbers in the industry. So it definitely makes sense to internalize this process if you're reaching these volumes or even half of that. Otherwise, I believe it's always a good choice to give to the specialists, which are mainly third-party software providers, the bridging, aggregation, risk management part, which is actually the choice of most brokers in the market. So it's a trade-off that really depends on how busy the operation is in general.
Okay, so if we're looking then on different business models, some prefer aggregating, others are market making. Obviously, there are companies who can, out of the box, offer a solution for both types of business models. But how can those companies then retain a USP for the brokers? How is it possible for the brokers to retain a USP if the companies they're using are the same? So they have the same set of tools that they can be using. So, John, maybe you want to take that one.
Yeah, I mean, having a USP in this marketplace where everyone is pretty much on the same platform or same few platforms is very difficult. And I'd say there's two different ways you can really make your offering unique. The first is to have a platform that you can customize, maybe by customization by a vendor, or you can bring it in house, as Damian is telling us. And the second option is to have a platform that is surrounded by APIs with plugins that you can, bring different third parties together and make it your own. And there are pros and cons of both of these. Obviously, customizing it, building it yourself, you're going to get exactly what you want. You're going to have your business model. You're going to be able to handle your volumes, but it's going to cost you. Not many brokers can afford to pay, for their own teams. So maybe they can pay and have a base platform and share some of that customization. And then obviously with the APIs, there are hundreds of different vendors that you can plug in. You can bring in your portals, your CRMs. You can really make it your own. But you're going to be limited by what is supported on those APIs and what's supported on the front end. So maybe you're not going to have a fantastic seamless integration on an app or something like this. And obviously, the best solution is a mixture of both. So being able to bring in third parties for things like CRMs, portals, not building it from scratch every time. There's some great stuff out there, but then being able to customize where you need to. And yeah, like our platform, for example, we support retail FX brokers, institutional FX brokers through to crypto exchanges, and we're even going live now with a CFTC regulated SEF in the US for complex option strategies. And this is all built on the same platform. And that last example, that platform's been quite heavily customized, and they also have brought in at least 4 different vendors to be able to support these kind of models.
Would you customize it though, or would you just give out open APIs and configuration APIs to clients to do it?
We like to think of ourselves as a very open and flexible platform. So we have APIs around the whole platform. Anything can really be done on the platform if someone really wants to build it themselves. But we also have, like I mentioned in the opening thing, we have over 800 engineers, and we can run custom projects. And when a broker gets large, we can even sell them the source code, and they can take it in-house.
Elina, can I respond? Devex is a fantastic platform, and we actually use bits of their price feeds in price formation. But I'd like to sort of politely disagree. I think that it's possible, and actually it's imperative for brokers to be able to find and develop unique selling points when it comes to execution. In fact, as I mentioned earlier, we do use meta quotes, but the core unique selling points of Exness do not sit in meta quotes. They sit in our market making modules that we've built ourselves. So the way we can offer things like gap level protection, if the market gaps, at Exness, you can get given your price despite the fact that there's a gap. That's completely unique in the industry. Things like midpoint stop out. I mean, the ability to go below zero, negative balance protection. I mean, these are features, these are unique selling points that we offer because we've been able to build them and customize them in-house. And I think that the vendors or the third parties that are going to be powerful in the industry are those that really allow brokers to customize, that through their own sort of programming languages to customize, writing in C++, for example, but to customize modules that can still speak to kind of core basic account functionalities.
But would you give that out as a technology to your B2B customer, or is it more about you kind of take that responsibility for making sure that the pricing you're providing them with is top of the breed?
Well, I mean, the functionality I was talking about there is largely linked to retail. Our B2B offering is going to have a range of USPs. I mean, I know the pain points in B2B. We want to achieve fast onboarding. I mean, is there anyone here that wouldn't want to improve the speed at which you can onboard to a client? I mean, it can take years. So we're going to provide things like fast onboarding, liquidity itself. You see brokers, they talk about their spreads being tight. Well, that might be good for one lot. But if you want to
that's the
execute
top of the book.
200 lots of gold at the touch price, you can do that with Exness because of our balance sheet. So
You can only do it with a market maker, right? You can't do it.
you can only do that with a market maker, correct? And that gives B2B clients total anonymity in the market. So if you are a public market and you have a big order and you put your order in the market, it immediately has signaling risk, and other market makers adjust their prices. So your ability to do that privately with minimal market impact, only comes when you're dealing with a big, market maker with a big balance sheet.
But that's your pricing engine. Matt, do you is your opinion similar to John's about kind of giving that package with open APIs, or
I think so. Definitely, you would go out of business as a technology provider selling a solution that was closed, that had proprietary reference data, client models, etc., because that's not the future. But I think what's interesting here is Damian is really zooming in to an execution tech stack and breaking it apart into 5, 10, 15 components that vendors here will sell as a simple 2-word strapline. And it's that ability to break apart the tech stack to see which parts of that that capability add value to their business model and therefore to their clients that Damian gets from the scale and the sophistication that they're bringing to the market. Vendors that offer out-of-the-box solutions that are focusing on time to market for their broker clients are doing a different thing. They're wrapping up solutions, lowest cost, lowest common denominator functionality, innovating absolutely at the edges, enabling connectivity to the wider ecosystem to enable firms to borrow innovation wherever it may be occurring. But those are different approaches, and I'm sure that as those firms that are taking that approach scale, they will start zooming into their proprietary stacks, their third-party vendor stacks, offering 2-word strapline solutions, and start trying to break them apart. And that can be expensive if you've coupled yourself very closely to a big out-of-the-box solution. In fact, it can be so expensive that you may never be able to afford it, and therefore you've built a business that's sort of trapped itself and run out of road, so to speak, on how it can evolve its technology execution offering.
If I may, I also think that offering the standardization with the possibility of connecting with various APIs is a good compromise between customization and standardization in general. So it's definitely something we recommend. To continue on the questions about unique selling points of brokers using the same type of technology, what I believe is important is also the depth of understanding the technology that you are using. So you can have brokers using the exact same softwares, but using it very differently because they don't analyze it, they don't study it enough, they don't know all the features that are available. It's something we definitely observe with our clients. We'll find some of them setting very basic execution rules. So certain accounts being executed on STP model, other warehouse, and you find other brokers that are going much more deeper in combining different criteria and reflecting that in the execution engine. So that also reflects in analyzing the liquidity flow, for example. It's something that we have tools that many brokers are not using, in which you can judge the liquidity pricing and execution based on its historical prices or historical execution. And this is something that a lot of the brokers just don't look at because they're not learning the technology enough.
So basically, if you plug Damian into FXCUBIC, they will always be top of the book and always get the execution. Is that what you're saying?
I think I'll let Damian reply to that.
May I add, I think these discussions are about the technology and our own interest, to be honest, but we need to look out of the window a little bit and see what's happening in the world. And I think traders now would be more than happy to pay a little bit extra, but to be secure that the brokerage company they are working with is a reliable company and they will be able to take out the deposit that they have if they want to. Because all these changes, yes, they're in the most priority and now attaching, connected with the crypto market, but it's just because the information is there, it's present. I think the unique selling point should be more targeting to the audience that you're targeting and to the reliability and your reputation. And from that perspective, you're choosing your providers. If you want to build your own department who will do all the software, yes, you need to invest maybe a couple of millions just to start to use them. Then you need to make sure that they always keep an eye on other softwares, because when you are just as a soup boiling inside your own can, you don't know what's happening outside. This is the benefit of using third party, because we know what's happening in the other companies in other countries, what happens in the US, what happens in Japan, what happens in Asia, in Emirates. We know how things are working broadly, not just in one market. And from that, they choosing the product that will fit best to the demands of the traders, because they are the clients of the brokerage companies. The goal of brokerage companies is not use the best aggregation with tens options. The goal is so that if your system is down for 30 seconds, if you there is, all the technology providers have, the small percentage of downtime, but if that happens, the brokerage companies in all the social media platforms, they will be slammed straight away with all the comments, with everything, and that damages the reputation very, very much, and the future outcomes as well. So the main thing is to have these trustworthy companies, and as I said before, the flexibility. So when the things changes, because their traders demand to have quick adjustment with the products, with the offering, with the new offers, taking away the offers, reactions. The same they would expect from technology providers, that when something happens, that you are there to reply, to provide reports, for example, about what's happening, to be 100% trustworthy.
Yeah, I think you're kind of touching base already on the trends in a way, because you spoke about cryptos, you spoke about how it's developing. So John, I know you do a lot in the crypto space. Is that the emerging trend, you would say, for 2023?
We certainly,
or is it kind of...
Yeah, we certainly see a lot of interest in crypto, just because brokers nowadays it's too risky to just have a single asset offering, and lots of clients come to sign up just because they have crypto. Brokers might not actually make much money out of the crypto, but then they can cross-sell into other areas. But I say the trends that are coming over the next couple of years, we're not going to see the large volumes that we've seen over the next, over 2020 and 2021. Traders are going to have less disposable income. And I think the way that brokers will work is there's probably not going to be too much really interesting innovation. It's going to be about minimizing your risk and minimizing your cost, or maximizing your profits. So minimizing risk, things like I mentioned, adding asset classes to make sure you're not losing clients. Maybe adding another platform that's so you at least have two. You can have reliable mobile platform, for example. And then reducing costs, I guess maybe Damian will speak about how they're maximizing profits and things like this. But we're seeing lots of brokers interested in our AI support bot, which can answer 80% of the queries coming through. As Damian's point, having these big call centers is expensive. If you can answer 80% and keep on learning when you're answering them, and then send 20% of the queries through to a person, this is a good way of reducing the costs.
Okay, so Matt, I know you're also doing things in crypto space. Is it still hot, or after the fall of FTX, it's kind of, we're really in the winter?
It continues to surprise me. After the Coinbase stumble earlier in the year, we saw quite a few institutions coming into the market, investing in new platforms. And I think that if the price of Bitcoin, because that's basically what everything correlates to, despite the fact that people like to think it's an uncorrelated market. As the price of Bitcoin went down, people thought that they maybe had a chance to catch the bus the next time round. I think if Bitcoin prices had stayed high, a range of newcomers to the market wouldn't have invested because they would have felt they'd missed the bus. Amazingly, post the FTX bubble bursting 2.5 weeks ago, we've seen new crypto platforms still, from our perspective, getting signed and starting development. So people aren't losing confidence. If anything, I think the firms that we're seeing sign up to start to build new crypto technology, crypto exchanges, crypto distribution platforms are those backed by significant balance sheets. I think the crypto is going to become increasingly less Wild West over the next 3 or 4 years. I don't think you can pretend that just depositing your crypto with some firm headquartered in the Bermudas is a good idea anymore, and that you're going to look for regulated entities who are doing crypto and will probably bring a regulated approach to crypto, even if that crypto product isn't regulated as tightly as a traditional financial services product or financial instrument.
I was going to oh, I'm sorry. No, go ahead. You sure? Okay. I think the FTX incident happened after the crypto winter. So we've been seeing crypto on the decline. At Exness, we still see huge amount of demand. We execute close to 2 billion a day in Bitcoin. So it's still big. It's still relevant.
Is it spots or CFD?
On CFD, The reality is I think that FTX is a little bit of a gift to the crypto industry, as unfortunate as that may be. But you only need to look at the equity marketplace. I mean, there's a reason that the equity marketplace is structured as it is, where you have, central limit order books and custodians and they're separate, is because they've been through hiccups and they realize that if you put all your eggs in one basket and you have all your collateral where you have all your trading, that might be a good business model for the exchange or FTX or Binance, but in the long run, it isn't safe. And so FTX is an opportunity for the crypto industry to kind of unbundle itself and get regulated. And companies like, say, Finery Markets and Crossover Markets, these are our upcoming bilateral exchanges that are going to, at some stage, really challenge this, that the Binances of this world that are very, all-in-one and risky.
And there's a real conflict here between the crypto natives who believe that the technology should enable a trustless solution, and those who view the asset as a speculative one, who would obviously want, as Damian is saying, a more split apart value chain with assets and custodianship and execution all separate, so that you don't lose everything because of one rogue firm.
Also, I think you're going to see a lot more people trading crypto derivatives rather than crypto spot. Obviously, it comes without a lot of the pain points, the potential risks, and way of doing it. It's much more simple. So it's interesting to hear Exness is doing much larger volumes on CFDs compared to spot.
I think the crypto trend has been around for some time now, and personally, I didn't see an increase in demand in 2022. Neither I expect for the next year. Why? One phenomenon we observed, one type of demand from the brokers, is that now they all want to have multiple platform, but also multiple asset class, being able to provide full solution for any trader coming to them. Which, if you think about, it's a bit contradictory, because usually when an industry gets saturated, we see more specialization in certain asset class, which is not what we're observing. What we're observing is that every brokers nowadays want to connect to multiple sources of liquidity, being able to offer multiple asset class to trade on. And that is definitely a trend that I think will continue, because nowadays traders don't want to have accounts in several brokers. They want to rely on one good partner for trading and being able to trade crypto, CFDs, physical stocks. And I believe that's a trend that will continue.
Okay, so we have a little bit of time left, and I think we can do Q&As after we finish, so please feel free to approach any of the panelists. Damian, I wanted to ask you about, obviously we know Exness, that you have the biggest volumes on the market and you must generate crazy amounts of data, right? So I guess you do a lot with big data and big data mining in general. Is this a trend, you think, in the industry, and how do you manage it?
I mean, yeah, data's enormous, and it's a big part of what market makers live and breathe off. I mean, our price formation is based on our ability to extract huge amounts of data in order to form a midpoint, and then subsequently put a spread on that midpoint and offer a bid and offer to our clients. It's all about huge amounts of data. It's definitely a pain point as well, because I've never worked in a firm that's got their data, perfectly accurate. Including at Exness, it's a constant evolution. You'll have these really clever young, quants, that join Exness, and they're like, Jesus, where is the data? There's thousands of different tables and complexity.
It's fun.
And companies are going through, huge exercises now to try and organize that data, not just accessibility, but also privileges, access points, who can access it, who can't. But of course, the data industry is just going, it's going ballistic. And, in our industry now, obviously, if you think about ticks, tick data, I saw some, I can't remember exactly, but I think, just in a day's worth of tick data, you're collecting something like 220 gigabytes, of data. And if you imagine, you're trading every day, you need to be able to look at that data, store it, search it. In fact, we offer our data in real time to clients on our website. So if anyone ever has an issue with an execution, we can tell them to go onto our website. They can immediately see every single tick at every single price point, and figure out whether their execution was problematic or not. But just offering that service is a challenge. So yeah, I think big data, if anyone's in the big data industry here, you've got job security for a long time.
That's very true. Thank you very much. We ran out of time. I think it's been an amazing panel of great experts, and thank you very much for your time.
Thank you very much.
Thank you very much.
Yeah.